us are our traders from the New York Stock Exchange, the CME, and of course the NYMEX. Jon, I do want to begin with you. What was your main takeaway from these minutes, and who, in your opinion, here is the most important Fed members that people need to be paying attention to as we move into the final trading month of the year?
Well, so my main takeaway was that the Fed has its eye on a bunch of problems right now that could derail its forecast. Weak growth overseas, it looks like inflation is slowing down, market volatility. But none of these concerns that they're looking at are serious enough at this point to change what they're planning to do, and that is to move towards it, raising short-term interest rates sometime next year, towards the middle of next year.
Okay, let's talk about the things that they seem to be most preoccupied with, Jon. In particular, it was the volatility in the markets. They talked a lot about that. But remember, there's a 3-week lag here. So how much can we take away from their comments about the market, not just the stock market, but also the labor market? They seem bullish, but the data that we've gotten in the last couple of weeks has not been that positive, Jon.
Well, so let's talk first about the financial market. They're actually concerned about one specific day, and that day was October 15th. A few days before Fed officials met, you saw these really big drops in 10-year Treasury bond yields. You saw a lot of volatility in stock prices, and what the Fed is trying to figure out, and what they were starting to talk about there at their meeting in October, was what's going on, why did that happen, and to what extent was the Fed's actions driving this market volatility. You know, they're not really worried about it right now, but they're looking at it very carefully because they're concerned when they start raising interest rates next year, we might see more volatile days like we saw back on October 15th.
What about the issue of growth, Jon? I mean, we're in a very slow growth environment, let's be honest here. Wages, incomes are not keeping up, certainly with other parts of the economy. Do you think that the Fed, in particular, I mean, we've had 6 years of zero interest, 6 years, and we're still not where anybody wants to be when it comes to the economy. Labor markets, you could say the financial markets can be separated from that. Do you see anything in the language today from the minutes that kind of has you think otherwise when it comes to the labor market in particular?
Well, so the Fed is actually feeling pretty good about where the U.S. domestic economy is going right now. So growth picked up earlier this year. 4 of the last 5 quarters, we've had growth in excess of 3%. We probably won't get that in the fourth quarter. The unemployment rate has come down under 6%. Fiscal policy is not the headwind that it had been for several years now. You know, when you look at how the U.S. is doing and you compare it to a lot of other bad apples like Japan and Europe, it looks like we're in a better place than a lot of our trading partners are right now. So they're comfortable with where the U.S. is going and a little concerned about where the rest of the world is going.
Certainly, and they did mention Europe, and they certainly mentioned Japan as well, and the news actually got worse in the last week over when it came to Japan's economy. Trent, let me bring you in here, Trent, because last week when we asked you what the most important event would be for traders this week, this is what you had to say. Listen to yourself.
It's a central bank-dominated global place, so I'm going to go with the Fed Minutes Wednesday.
Okay, there you go. So the minutes came out an hour ago. What is your play during this last hour of trading, Trent?
You know, I mean, I was certainly looking forward to the events today, Cheryl. But, I mean, as it turned out, we didn't really gain any incremental insight as far as the timeline is concerned with which the Fed is going to raise rates. And that's really, as a trader, that's what I'm looking for in these minutes. There are some things that Jon mentioned that I would agree with. There are some takeaways with these minutes. I think inflation specifically is being mentioned more and more in these recent meetings, and it's something to keep an eye on as we move into December's meeting. Also, they did mention the slightly weaker global outlook with specificity to Japan and Europe. Ultimately, they decided to leave it out of the statement, so I think at this point in time, I think what that means is that at least right now they don't feel that global economic outlook is going to affect their near-term Fed policy decisions. So I think all in all, the minutes did confirm, a slightly more hawkish stance that they took, at least in my opinion, at the end of October's meeting.
Certainly. And, Jonathan Corpita down at the New York Stock Exchange. Jonathan, here's the thing. I mean, you weren't really looking for anything spectacular out of these minutes. And sometimes, let's be honest, they're a bit of a snoozer. Did anything, though, in these minutes today surprise you?
Not really, and we got exactly what we were expecting. I know Trent said this was the most important thing that we were looking at on our calendar this week, and clearly, when you get what you're expecting, I think we're pretty happy with that. The outlook moving forward clearly is a little gray, considering what's happening in Asia and Europe, and I think pointing that is very important. But the overall timeline, the information on that timeline, we haven't gotten that information. We're not going to get that yet. And investors are starting to get a little bit unsettled with that. We've been talking about this for a long time. You said 6 years, zero interest rates. So at this point, some information will be helpful. We weren't expecting it. We didn't get it. I'd really like to see it come January, just at least a timeline.
Okay, Alan, I want to get to you just in a moment on Keystone. But before I do that, and I want to move on, I do want to ask Jon Hilsenrath one more question here, and that is the most important Fed member, Jon Hilsenrath, the most important Fed member, in your opinion. Do you think it's Stanley Fischer?
I do think Stanley Fischer is one of basically the three key people. That's obviously Janet Yellen is one of them. Stanley Fischer is the number 2 at the Fed, the vice chair. And then Bill Dudley is the president of the New York Fed. And those are the people who are really shaping the Fed's decisions. Right. And, I think you especially have to look at how Dudley and Fischer's comments play off of each other over time. Dudley has sounded like a pretty dovish guy of late. And, we have to see if Fischer is tacking the same way. We're still kind of waiting to hear more out of the guy, but those are the three people.
Knowing Stanley Fischer, and I interviewed him in Jerusalem about 5 years ago. Knowing him, he's taking a very much a wait-and-see approach. He listens before he speaks, and that's actually a good thing. Before I let all of you go, though, I do want to go quickly to the NYMEX and ask you, Alan, about Keystone, the Keystone Pipeline, the defeat of that. Certainly, now we've got nat gas that's rallying today. Do you think that there's an overreaction happening right now in the nat gas contract because of the Keystone defeat in the Senate last night?
Well, not necessarily an overreaction. First is, I think next year it does get passed. So this is a delay, but not the end of it. As for natural gas, though, that real driving force, it's weather. As we have the idea of very cold winter coming up, it could go much higher. However, for myself, I think we're getting close to a top here. We would need quite a cold winter to really get off the excess natural gas that's sitting in reserves. So for myself, we're getting close, 460, 470 after that. I think we come off in natural gas.
Alan, well, I have to tell you, looking at the forecast, and I've got the best weather people in the business right here in my building, I got to tell you, it's going to be a rough winter, and that will affect that contract, and it might hurt the economy as well, unfortunately. So this is something we're going to definitely watch from several levels. Gentlemen, thanks to all of you. Appreciate your time today analyzing, of course, those minutes and a lot more happening in the markets.